Hello and welcome to Moneylife. This is Sucheta Dalal. This is yet another episode of my video blog which talks about issues on finance and financial literacy. I'm sure most of you use UPI to make payments, right? Unified Payments Interface, which is so widely popular that it's making global news. Now, the question is, why is UPI so popular? Mainly because they don't charge for transactions. There is no merchant discount rate, there is no fee, and we love it. That's why people use it even for the smallest transactions, whether you want to buy a soft drink on the road or a packet of biscuits. It's so easy to do. Now, if banks had been charging for UPI, you would have known, and all of us, believe it or not, would have made a hue and cry about it, right? So most of us don't even look for charges. We don't think the bank is charging us because the finance ministry has said there'll be no charges. The Reserve Bank of India has said there'll be no charges. The National Payments Corporation of India, which developed this platform, also has said there'll be no charges. So why would anyone charge us? It's a law of the land. But 3 people have said, wait a minute, there are charges. One of them is an IIT professor, Ashish Das, who researches banking issues. He is with IIT Mumbai, the mathematics department. Another is a former banker who writes a blog. I'm going to show you a link to the blog. And the third was an article in the Times of India just a couple of days ago. Now, they said certain banks had been taking advantage of another Reserve Bank of India rule, which applies to cash withdrawals and withdrawals from your ATM. Most banks say more than 3 or 4 withdrawals, depending on the amount of money you have in your savings bank, will be charged. So, as a rule, you withdraw 3 times in a month and the 4th time you pay a fee. So, they have combined these two and they have said UPI is also a debit from your account, so we will charge. Now, they've not done it openly. This is what all these 3 people have said. They've done it by stealth. I'm going to go into a little bit of detail about this. All of this is based on the work done by Professor Ashish Das, whom I mentioned before. So let me get into the story because you need to know what happens because we operate on trust. Government says UPI, no charges. We believe there are no charges. So you need to listen to this. Now, before we examine why banks have flouted the rules or whether banks have flouted the rules, you have to look at the fact that look at the number of people impacted. 76% of young Indians apparently use UPI these days more than anything else. Credit cards or any other form of payment. People don't like to carry cash. But here it turns out that more than 9 public sector banks were using this little trick that I mentioned above and levying charges. They weren't doing it directly, so it's not like you do a UPI debit and there's a charge. They were doing it by the indirect route. So they wait for a month. They calculate how many times there are debits. They have offered more debits for UPI. So some of them have said 10, some of them have said 50. But once at the end of the month, your total debits, which is ATM, cash as well as UPI, is above a certain number, they were quietly imposing a charge. Now, lots of people complain. People are smart. There are plenty of people who look at their account statements carefully. Not all of us do. But they went and complained there was a noise. Now, this rule that you can't charge was actually by the Ministry of Finance from the Central Board of Direct Taxes. It was an order of January 2020 that all electronic, this part of Digital India, all electronic transactions will not have a charge, right? So when there were complaints that banks were doing this, on 30th August 2020, remember the year, 2 years ago, the CBDT responded by issuing a very strong and unequivocal circular which said that under Section 10A of the Payments and Settlement System Act 2007, all electronic transactions will be free. They also said any such charge levied by lenders, banks, whatever, would attract a penal provision, and they asked banks to refund all the charges that they had collected since they first issued the circular, which is 1st Jan 2020. Accordingly, State Bank of India fell in line. On 15th April 2021, it issued a public statement. Statement also in reaction to things that Ashish Das had said. issued a public statement saying it had stopped collecting charges and had refunded, this wasn't part of the statement, this was part of an RTI, that it had refunded 90 crores collected on digital transactions since Jan 2020. In fact, here's the SBI, an excerpt from the SBI statement, which said SBI had refunded the amount, right? So far, so good. Now, Professor Das filed the RTI, so he knows it's 90 crores. What about others? Turns out that 8 large banks had also been charging. They also refunded money without any announcements after CBDT's 2021 circular. Now, Professor Das and the blogger quoted above allege that 2 other banks had continued to do it. IOB was one of them, Indian Overseas Bank. The other was Canara Bank. Now let's come to October 2022. The ex-banker who blogged about this indirect payment sent me a link to his blog during Diwali. I took it up with NPCI. NPCI on its own checked with the top 15 banks and reiterated that after the CBDT warning, none of them had been charging for UPI. So, very good news for all of us, except Canara Bank. Indian Overseas Bank, like I said, was one of those mentioned. IOB issued a tweet, we are showing it to you here, and it said, we are not charging anymore. There was an article which said that we may have been charging for UPI, no such thing. Now, what about Canara Bank? It's very interesting. I have written to Canara Bank, haven't got a reply. But on 1st November, Canara Bank had a very curious tweet, almost as though pushed to the wall. It says, effective 1st October 2020, which means just the beginning of last month, it levies no charge on UPI transactions for BSBDA customers. What is BSBDA? This is a basic saving, basic deposit account. It is an entry-level account. It's not a Jan Dhan where the government offers a lot of protection. But this basic entry level is a zero balance account with lots of restrictions about use of checkbooks, credit cards, and just 4 withdrawals a month. Which means who uses this BSBDA account? Usually students, people in the lower economic group. Banks ruthlessly were doing this indirect method to charge them. What is shocking is that in spite of CBDT's clarification on 30th August 2021, and the first circular saying you won't charge, banks used a backdoor route, happily charged, and until 1st October. Will Canara Bank get away with it? How did they do it? Professor Ashish Das tells me that this is what they used to do. The method adopted by Canara Bank was to charge 5 rupees by keeping track of the number of debit entries in excess of 4 in a month. The cumulative total excess entries, suppose there were 9, then 4 of them would be free and they would charge for the remaining 5, which would be 45 plus GST, 47. This charge is calculated on the midnight of 31st and posted for either the 31st or the 1st of next month, which means the charges will reflect later and customers didn't know. So we've already shown you the tweet from Canara Bank, said October. Now, this brings me to what this blog is about, which is, why is it that when the government makes an announcement, RBI makes an announcement, we as consumers believe it? Why are we being cheated through this backdoor route? Is there any consequence to this brazen flouting or misinterpretation of orders? And how is it that public sector banks, mind you, owned by the government of India under the finance ministry, how do they think they can get away with it? My answer is very simple. It's because the Reserve Bank of India is very lax. RBI officers continue to operate out of an ivory tower. In their scheme of things, handling the customer services department comes low on the ranking. They are unconcerned, they are unsympathetic. In fact, the consumer education and protection department rarely engages with consumers, rarely responds to them. Even the blogger that I talked about, despite being an ex-banker, did not get replies. Now, this is a curious contrast because RBI Governor Shaktikanta Das is very different from the rest of the organization. In fact, I would say, based on my experience of over 30 years of activism and journalism, that other than Governor Y.V. Reddy, Shaktikanta Das is the only governor, yes, only governor willing to listen, is serious about customer issues, acts on them and responds. But he obviously can't do anything about the rest of the organization, which is entrenched cadre officials who come into the bank, keep rising and are apparently a law unto themselves. He is not able to do much about resolving conflicts decisively. It's not that he doesn't try. In fact, in a whole range of issues, there are no standard operating procedures. And the governor is fully aware of it, as can be seen from his statements. In fact, he is supposed to have initiated a comprehensive exercise to improve customer grievance redress. In fact, he alluded to this at the annual conference of RBI Ombudsman. In fact, he specifically spoke to them last month because we have serious issues with the lack of sympathy and empathy by RBI Ombudsman and how they pass orders. The governor also expressed concern over rising customer grievances. That means their data shows they are increasing despite efforts to resolve them. He said, RBI Ombudsman and regulated entities must identify root causes of persisting customer complaints and take necessary systemic measures to correct them. But this is a slow process. In fact, this is exactly what we have talked about for over a decade of the existence of Moneylife Foundation, which is our not-for-profit entity. We say, don't make every customer individually fight for something that is wrong over and over again. If you see a pattern, if you see 3 or 4, find out what the issue is, issue standard operating procedures. That's how the rest of the world works. Now, the issue of UPI transactions being charged is also apparently under review. Mind you, why are they saying it's under review rather than just acting on somebody who, or on one bank or all banks who flouted the rules? Is because they've suddenly put out a discussion paper which says, should we charge for UPI? Hello, that's an entirely different discussion. Let's not bring it into this. At the moment, the government has reiterated last month, there are no charges. Let's stick with it. If people are charging, act on it. That is how you show a strong regulator. Otherwise, banks will find ways to flout rules knowing that nothing is going to happen. But here too, it's under review. RBI has not lifted a finger. Thanks to all our pushing, thanks to bring it in the public domain, now even Canada Bank has fallen in line. So the issue is over, which means RBI has got away by doing nothing, will not punish those who flouted the rules, and will not act on it. This is not limited to UPI. You as a consumer or a customer of financial services and products should know that this happens everywhere. If you've been watching this blog regularly, you would know that in the past I've talked about no SOPs on liability of lenders when they lose your original property documents, which create permanent damage. If you want to, all these articles can be read. You can go back and watch the blog. RBI Ombudsman apparently are ignorant about something called public liability insurance or comprehensive liability insurance, and every bank has. So we had to take up the issue of a customer who fell in a bank branch, was badly injured, still on a walker, spent lakhs of rupees. The bank ought to pay because it happened in the bank branch. It is covered under this insurance. But even the Ombudsman dismissed his complaint as non-maintainable. We had to go higher up in the RBI to get action. For one individual, what about the hundreds who may have had this experience? We need standard rules. We need guidelines. We need directives to say, a customer falls and injures himself in your branch. It's your responsibility. You have the money to act on it. You should. It's not happening. Similarly, nominations, transmission of deposits, unclaimed deposits. What are the rules? Every bank and every branch can cook up rules because there are no SOPs. All that RBI will do is issue statements from time to time saying, treat customers well. Well, even when they say there are no charges, they're going to charge you. What impact will something as vague as treat customers well, don't harass them have? The fact is, remember in UPI, 9 banks continued to charge until the CBDT threatened penal action, right? So this happened a year later, 2021. One bank charged in October 2022, which means Banks will continue to do this. It will not change. Not unless Governor Das demonstrates that he's serious, not by asking things to be reviewed, but by levying exemplary penalties on banks that harass customers, that violate not just the spirit of regulation, in this case, a specific order by the CBDT and the Finance Ministry. If you don't take action, the signal that you're giving them is you can continue to harass customers. If you don't issue SOPs, it means that you are hiding behind the absence of rules, which means that every customer has to keep fighting. If you agree with what I'm saying, please share this. Let's make our voice heard. Let us talk individually, collectively, write to the bank, and let's make a difference. Thank you so much.